Good day. Thank you for joining me for the PSG Wealth Offshore Fund update. A look back at markets in February. Equities were positive on the back of the optimism over the vaccination programs. Global equities gained in February, with lowly valued parts of the market faring well. Vaccine optimism ultimately trumped fears that a stronger than expected economic rebound could alter the trajectory of the monetary policy. Commodities gained, with the energy sector the best performing index component as crude oil prices continued to rise. Looking at a fixed income matrix, which breaks down the indices into their different maturities and quality, here we can see corporate bonds outperformed government bonds in the month. Investment grade produced negative total returns amid the global sell-off in yields, but high yields delivered gains. Looking at the month-on-month growth in assets under management for the offshore solutions, we can see February saw another strong month, with the AUM surpassing the $2 billion mark, which is an excellent milestone. Looking at the short-term highlights, over the 6-month period, we can see the PSG selected managers have regained their strength, with 62% of the underlying funds outperforming their sector average, while 97% outperform over the longer 3-year period. Looking at the individual funds and starting with the Global Preserver, the fund's AUM sits at $153.7 million, split equally between our 5 underlying managers. We have made no changes to the managers held within the fund, however, we are busy with a detailed research report on the underlying funds as well as the sector as a whole. At the bottom, I've included the risk radar, which assesses at quantitative and qualitative factors. For the pound class, currency continues to be a headwind, with the pound strengthening 1.9% for the month and 9.23% over the past year. The fund rose 76 basis points in February, outperforming its sector for the month by 86 basis points. The fund is above the sector over the recommended holding period of 3 years by 25 basis points and since inception by 57 basis points per annum. The chart shows a 3-year rolling return since inception of the fund against its peer group average. The fund has seen a great recovery in the past few months as valuation rotation and risk on emerges. Even with the drawdown seen last year, the fund still remains 81% over the sector average. For the global moderate, the fund's AUM sits at $132.6 million, split between our 6 underlying managers. We made changes during early 2020, however haven't made any changes since and are happy with the construction. At the bottom, I've included a quantitative and qualitative risk radar. On the quantitative side, we have the MFS Meridian Global Total Return and Capital Group Global Allocation. The Capital Group Global Allocation also appears on the qualitative radar. The reason for this is one of the 2 fixed income managers will be replaced. Andrew Cormack will replace Robert Netherhart, who will take up a position more focused on emerging market debt within the global organization. Looking at the fund's performance in February, the fund rose 1.02%, underperforming the custom benchmark by 49 basis points. The fund is above its benchmark over the recommended holding period of 5 years and since inception by 18 and 4 basis points respectively. Looking at the rolling chart, the fund remains in the second quartile and remains in the upper half 64% of the time. For the Global Flexible, the fund's AUM is $809 million, split equally between the 6 underlying managers. Here we haven't made any changes to the portfolio but continue to assess it. At the bottom, I've included the risk radar. And here, for this radar, we can see the MFS Prudent Capital appears. The reason for this is due to the fund's conservative stance. It is expected to lag when equity markets rally and risk in markets remains elevated. Looking at the performance, The fund rose 68 basis points in February, underperforming its sector by 25 basis points. The fund, however, has outperformed its sector over its recommended investment horizon of 7 years and since inception by 6.07 and 6.21% per annum respectively. As you can see from the rolling relative tables, the fund remains well positioned with 100% in the first quartile. For the global creator, the fund's AUM sits at $911 million split between our 9 underlying managers. We haven't made any changes, but do continue to assess the sector. Looking at the quantitative and qualitative risk grade at the bottom, we can see only 91 global franchise appears on the quantitative side. The fund holds more quality type equity, and therefore, when we see risk on in markets, the fund will generally lag. Looking at performance, the fund rose 2.79% in February, outperforming its sector for the month by 81 basis points. The fund has also outperformed the sector over the recommended investment horizon of 7 years by 3.43% and since inception by 2.5%. As you can see from the rolling relative chart, the fund held up well over all periods and remains in the top quartile. As a conclusion, the peer group rankings remain strong across the board, with the longer-term numbers producing favorable results. 5 of the 6 funds have produced average and above performance over their recommended holding period. To tie this all together, we can see that the PSG multi-management team is achieving their 3-pillar approach of consistent above-average performance at below-average risk while maintaining a competitive price. Thank you. Please take note of the following disclaimer.